Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Monday, February 14th, 2022. Markets kind of had a gyrating day today. Early in the overnight, again, I happen to be cursed that because I'm so intertwined in crypto and the markets, I generally wake up a couple times throughout the night and check the futures. But if you looked at the futures in the overnight, middle of the night or so, East Coast time, you would have seen NASDAQ futures down about 175 points. Looked like a bloodbath out there in the making. This morning we were down, and then all of a sudden you had a key player from the Russian side saying that there was potential still for a diplomatic solution, right? So again, what did I say? Friday you had this, scary kind of headline Friday afternoon about potential invasion. I didn't buy it one bit. I still don't buy it, at least until the Olympics are over. China and Russia are generally pretty buddy-buddy. We know that. And again, China likes to have the focus on their Olympics, all right? At least until most of it's over. So, maybe that pushes it into Wednesday. I think they end on Friday or Saturday or something like that anyways. But bottom line is, you got the kind of the olive branch today that there still could be a solution that is diplomatic. The markets very quickly went back to the flat line, if not slightly green, and then we opened basically flat on the day. You could see the first few candles on this intraday 10-minute chart flip-flopping between red and green. Then we down-ticked a little bit. Then we actually had a nice rally right up to resistance here. Then in the afternoon, we kind of got some more negative stuff coming out. Potential, interest rate type scare type stuff. You also got some, again, some worry about maybe now that Russia's thinking about starting their attack on Wednesday of Ukraine, or invasion on Wednesday, and that basically caused the market short term to roll over. And then again, by the end of the day, you saw some buyers step up and kind of float things back up. Bottom line is, the S&P 500 ended flattish to slightly negative, down about 1/3%. Not a huge day when all was said and done. Now, what's interesting is usually the day after Super Bowl is a pretty quiet day. Now, I would say today, comparatively, was a quiet day. Like, if you look at the last, Friday, or if you look at Thursday, today was a quiet day. In the scheme of the last few years, today would have been pretty active by comparison. But again, we did see the markets chop around and end just slightly lower. NASDAQ 100, if we take a look here at the NASDAQ 100, guys, on an intraday basis, the NASDAQ basically eked out a small gain. We did see stocks like Amazon and Google up most of the day. Facebook still under some pressure there. Microsoft ended flat. Apple ended flat. But again, we did see some strength in some key names in tech land, and that helped eke out a small gain on the QQQ, the NASDAQ 100. All right, if we go to the IWM was down about 0.4% today. And again, not a big move here either. One of the key standouts, I saw banks today. JP Morgan down $1.80, Bank of America down about 50 cents. So the banks were weaker today, and generally that puts a little bit of pressure on the Russell. You also had a fair amount of, smaller stocks that were still under a little bit of pressure today, although not a whole lot. Interestingly enough, SC, take a look at this one. This is one we had and we took profits on, remember? And you can see again that this one did have a beautiful dip today. Just tremendous move to the downside. Am I interested? I'm sure a lot of you guys are wondering. The answer is yes. At a certain point, I absolutely am interested. If we flip over to the daily chart, I could see myself starting to accumulate maybe as early as this opening print, which was around $125. So, we got to 127 today. Yeah, I could see nibbling a little at 125, maybe a little bit lower into that tail. And then looking for, again, when I get in at those prices, I don't necessarily expect that to be the low, but it's kind of the dip the toe in the water point. And then obviously we go to the charts to find out where the next level is going to be. And it looks like around 100 to 105 would be another significant area of support. So again, you don't know if it's going to get to 100, 105, but if it does, then we add to the position and we wait for that epic bounce, just like we got here. Again, just to showcase how big these bounces can be, This SE went from this low at 120 bucks all the way up to $180 in a matter of basically 2 trading weeks, right? So again, $60 move on $120. That's 50%. And what's amazing is, that's a 50% move in the stock right there, right? That's what's nutty about it. But look at still, how far it's off those highs. So, this is why I love swing trading, right? Is because, you can capture, we didn't even capture that much. We definitely didn't capture 50%, but we captured a decent chunk of change. And, all we're doing is just buying support levels and, kind of accumulating and letting it do its thing and banking money while people that, think about buying over here. Thought you were a genius for buying at 280 when it went to 360. And if you still held, look at where you are now. From 280 down to 130 right now, 129, you are down over 50% at this point. So again, it just, to me, there are certain markets that you could argue are better for buy and hold, where the market just is grinding up because the Fed is just there with injections of capital nonstop. But markets like this, swing trading is so much better, so much better when you have more of a real market, or even you could argue a market that is now starting to, convulse because the Fed is removing the drugs from the system. And we all know, well, we don't all know, but you know that drug addicts, you take down that, there's going to be repercussions. There's going to be withdrawal symptoms. And you could argue that the market is experiencing that. Okay. All right, so let's see what else we have on the radar here. We did see certain stocks like Zoom eke out a little bit of a gain today, some of these other ones as well. So that was good to see overall. I'm going to flip over to our daily chart now. Again, we're going to take kind of a little bit of a look here. That's Solana's chart. We'll bring up the spiders. And again, the spiders chart, here's your spiders chart, your long-term trend. Again, that's clearly been broken. The big question in my mind is, do we still have a little bit of upside before the next flush, or are we doing the next flush now? Key support on the next flush is going to be 420. That's going to be your key double bottom low. If that gets taken out, then you'll have not a whole lot until you get down towards this like 390 area, which is this upsloping trend. And if I zoom out again, it's this longer term trend that I think we have to come back to. And I think honestly, we're coming back this year. It's not even, it's not really a question in my mind. The probabilities are extremely high, probably 80-90% that we're going to come at least down to this line here, but likely into this training range, as the Fed has to fight inflation. The inflation is the boogeyman at this point, much worse than, low unemployment, which is what we have, right? If we had high unemployment and high inflation, then that's like really bad. But right now you have low unemployment, so they can fight inflation. When you see unemployment go up, if inflation doesn't go down, that's going to be really, really bad. Okay? All right, going to the QQQ chart here, the NASDAQ 100 chart. And again, you can see we have had that big bounce here. I can put these trend lines back in, but, again, I removed it just in the interim here. Let's do a little parallel channel here. Bear with me as it takes me a little bit of time to kind of get them correct, but that's not really correct, is it? But that's okay, whatever. You guys get the vibe here anyways. We can do it right to there. That's fine. Gives you kind of a good basis, but it's not, I have to redo my line. I just don't remember where I started it from last time. But bottom line is, you can see we kissed it down here, bounced. Now we're coming back in. If this line breaks right here, which is right around, we'll call it 340 to 342-ish area, 343 maybe. If that does break, then the NASDAQ has quite a bit of downside. Small support at 315, big support would be 300. This will be an epically big line right here. And again, you can see it very clearly with this pivot high right here and that pivot low, right? So you have the pivot low right there, the pivot high right there. That tells you that that is going to be significant support. If that breaks, you're heading to 260 right there, and eventually probably 240, which is your pre-COVID high. Right, which is, again, think about your high here, which was, 420 or so, whatever it was. Yeah, right around 415, 420 on the Qs. Imagine going to 240. And all you're doing by going to 240 is going to your pre-COVID highs. Like, that's how much risk is out there for the NASDAQ. That's why I can't, swing trading, sure. But if someone says to me, hey, we're down 15% off of the highs on the NASDAQ 100, should I go long? Oh, my God, no. Not if you're holding it long term. All right, not unless, I mean, if the Fed were to reverse course tomorrow and say, hey guys, we're not going to raise rates, we're going to start printing equal amounts of money as we've always printed, okay, yeah, then I'm in that camp. Aside from that, I mean, holy cow, there's a lot of downside, but there's going to be some great bounces along the way. And again, I still hold up plenty of shorts that I've held for a while, whether it be Tesla or Apple, and those should eventually pay out handsomely on the chart. Speaking of which, we can look at Tesla real quick here, folks. If we bring up Tesla, you can see what Tesla's doing here, right? I mean, there's a long-term trend that is borderline breaking, and I would almost guarantee you that when this longer-term trend breaks, that's going to be when the whole market, the NASDAQ 100, breaks. All right, Tesla was able to bounce today just a little bit off that line, but the more you hit this line, the more likely you're going to break it and then start your downward spiral on Tesla. And I've told you guys this for a long, long time. I believe that, yeah, I mean, you're going to have big bounces. They're going to be a bounce at 500. There's even major support right here at around 550 and so forth. But eventually, you're going to fill this gap right here. See all this choppy consolidation, tons of support right there. That would be where I would consider going long Tesla. But think about that. This stock was 1,200 and change up here, going to 400. Think about the decline percentage-wise that you will ultimately get in this chart if it does what I think it's going to do. I mean, it's incredible. Absolutely incredible. All right, so again, just keep it on your radar. But again, right now, this line, I mean, look at how perfect this trend line is connecting these lows. And look at how we just keep hovering. He kind of went here, then you rallied up. Now you pierced it there, but held. Now again, hit today, bounce, small bounce. When this line breaks, down you go. And again, I strongly encourage you to understand that you're not going to go straight down. Like I see, there's a small little pivot right here, and then like see this little top area. So there's lots of little supports where you'll get a day bounce or 2-day bounce or maybe even a week bounce. But ultimately, I expect it to head down to this lower level. It could be as early as this year, maybe next year, don't know, but I do think you're headed there, no doubt about it. All right, again, let's quickly go to the Russell on the daily chart here, and again, the Russell today eked out a small loss, not a big one, just a small little down day. Again, I think the beauty of the charts remind us, remember we were long the TNA, I took profits, and basically the very next day we topped out on it right there. You kind of hit that, or it might have been the same day I took profits, but that was your retrace line. Now, again, you've done a retrace to the scene of the crime. Remember, scene of the crime is when you break a key trend line like here, and then you do a retrace right back there, and then once you do a retrace to home base, technically you can go, to the next level, wherever the next trend line is, and as we drop, I'll denote that for you guys on the charts. All right, next up, let's take a look at Bitcoin. Bitcoin not doing a whole lot. Here's my lines on Bitcoin. Here's your perfect resistance line right here, which has played out to a T. Also, I said to you guys we have support at 41,850, and that's exactly what we're holding right here. Now what I'm watching for on Bitcoin is, do we make a bear flag, in which case we would kind of go slightly up sideways like this, and then you would drop, or do you start to have a more vertical move where you reattack this line, maybe back check, and then go there? Either way, this is your longer term move. All right, when I say longer term, 3 to 6 months, maybe 9 months, ultimately you're going lower. Probabilities, again, dictate that eventually you retrace to the scene of the crime. We just saw it on other charts. See, this would be the scene of the crime breakout, right? So the question is, how low does this get before do you go like this out here and then do, and then finally do we head down there, and where at what price point is that downsloping trend line? I still think it's remarkable to think about how many investors. I mean, if you look at the average investor, who invested in Bitcoin, sure, you have some investors that have been in from super low levels, but because of the hype last year, when it was making 65,000 highs and 69,000 highs, so many investors got in up in this 65 plus or even 60 plus range. They're down huge. They're down huge on their positions, and I hate to say it, but it's going to go lower. It's probably going to go down to the point where it kind of whips them out, where it pushes them to their maximum, because this is how markets work. They push you to that maximum panic and fear level where you exit, and then that's the bottom. And again, we have to be chartists, not emotional traders. And being a chartist, you can read that, you can see that, you buy support, you buy technical trend lines, and you'll make lots of money on the crypto space and Bitcoin when it has that bigger reversal. All right, taking a look at gold today, you guys know I've gone on record by saying this. Gold to me is the best performing. It will be the best performing asset. I have positions in gold. I have GDX. You guys know that well and sure. I've probably talked about this since probably the last 3 months of 2021 as being my best performer for 2022. So far, I am dead on. Granted, it's only into mid-February, but look at the breakout. The breakout has now confirmed based on today's price action. What that means is it still could check back to this level, right? Scene of the crime, retrace like that, but it should hold. And then my guess is you start your next leg up, and the next leg up, you know what's going to happen most likely? You're going to go and attack. You know, you'll have a little bit of resistance right here, then here, but eventually attack this 2075 level. Okay, so again, very, very interesting to kind of take note of that. Beautiful continued price action on gold, loving it. And yeah, I'm going to continue to hold. And again, especially if it's going to be the best performer, I think we just ride this baby out. We can take a look at GDX. And you can see GDX continues to move up beautifully. GDX has a little minor resistance here, but my guess is maybe it checks back a little bit, but then goes to this 35 level, which will be your next resistance on that. Silver again, you know, a nice little day today on silver. Hasn't broken out, though. I think that's important to note, is that really, again, in this lower range, you're just chopping like this. If you want to put in some trend lines, you can make a case for a trend line right here, right? I mean, I think this would be a very appropriate trend line from this pivot top to here, kissed it here, and then hit it here. And obviously, we haven't broken out yet, which again goes with my thesis that I've talked to you guys about for months at this point, that silver's a trickier metal because it has the industrial side. So if the Fed is raising rates and slowing the economy because of raising rates and making money harder to get, well, then the industrial side, if we go into a recession, is not going to do as well, even though the metal side and the inflationary side should do well. So it's kind of like a little dual-edged sword that you have to just be aware of. All right, I still think silver's an awesome, amazing winner down the road, but we just got to figure out, or price has to figure itself out in this range. All right. Lastly, let's take a look at oil. Oil opened sharply lower on that olive branch today, and then pushed up. You are kind of piercing this upper level. I still think it's going to pull back, folks. Now, again, you have this extracurricular kind of risk, which is Russia invading and then causing, you know, but again, that's being built into price here. I think we look back, whether it's a week from now or a month from now, and we say, yeah, well, they pierced this level, but ultimately, I'm still in the camp that this is going to be a downward move on oil coming up. Obviously, we have to get through this Russia-Ukraine situation first, but I do think that is a possibility. A couple stocks to mention today. Affirm continued to kind of move lower here. I am looking to add to this position. We only have a very small 1% position of the portfolio. But again, I want to make sure I do it at the right level. My general prognosis is likely around $42 would make sense, since my first entry was 48. 42 would be a great level. Give our average right smack in the middle around 45, which would be awesome for this volatile name. Again, remarkable to see that just a few months ago, this was a $170 stock. Here it sits at 43 and change. I mean, there's so many stocks like this that have just been pummeled, absolutely pummeled. Like even PayPal today struggled today, and you can see still lots of support down here. It is piercing the lower level, but I liked the resilience earlier in the day, and my line's not the greatest and straightest by any stretch, but earlier in the day it was down more. It actually came back to only close down $1. But yeah, I mean, overall, lots and lots of support right in here. You could always go down a little bit more. I mean, there's always that chance if the markets are really gonna get smoked, then I think that's always a chance. But another thing, let me erase that line. Another thing to kind of keep an eye on here, and this is a line I drew for the live day trading room here, is that, let me see, I believe this line here, right? So let me try to, that's pretty good, actually. We'll go with it for now. So right around 110 or just below 110, you have this upsloping trend line. You can see it pierced it here, but then there was a pivot point right there. And I know it's hard to see, you know, looking from this zoomed out basis, but the reason why it's okay that it pierced there and you're not going to the exact low there is because that was your COVID panic. So oftentimes you'll see on charts, you got wacky kind of crazy flushes there. You want to kind of focus on what wasn't an outlier, if you will, which was all of these little pivot lows and then this pivot low right there. So all of these right here as well. Okay. So again, Do I think PayPal could go down a little bit more? Yeah, sure. But you know what? I'll just add to my position. I'd love it. PayPal, again, down from another stock, down from over $300, getting close to $100, almost a 66% decline from the highs. I'm up for a bounce. You know, stocks like this, especially you look at an RSI on PayPal and you're basically at 20, sub 23 right now, or somewhere in that vicinity on that RSI, which is, and it's been down there for quite some time, almost 2 weeks at this point. So to me, it's a bounce waiting to happen. You know, you watch the charts telling us a bounce is close. You know, we'll wake up one morning to like an upgrade, or this, you know, big institution took a big position, or this, you know, inside trader bought a bunch. You know, you just don't know what the catalyst would be, but inevitably something will come along to cause that to pop. All right. You guys have a wonderful rest of your day. Thank you, as always, for hanging out with me on these videos and learning with me and following the markets and being members. Have a great one. Take